Good morning, traders and investors around the world. Welcome to this rocky December 13th edition this Monday of Pre-Market Prep Plus with Stock Odds. And we got a whooping going on in the market here. Not only have the pre-market gains eroded, we are now red on the session by 32 and a half handles. Forget about the pre-market high. We may never see that again, 47.23 and a quarter. I can't say forget about the regular session high, 47 on 150, because that's only 30 handles away. Pre-market low, 68 and a quarter. Nothing there for you, folks. Friday's low, basis the March contract is down under 46.60. The current low, 68 and a quarter, if you're looking for more on the downside. Crude not having a good day. That's down 68 cents. It's 70.99. Ooh, look at that 4-day trading range here in crude oil. Gold's up 340, 17.88.20. Just consolidating as well. Silver, that's in the green by 12 and a half cents at 22.32. Bitcoin, that's getting hit. It's down 11.55 at 47,335. Ethereum futures, we lost 3,900, folks. We're down $200.50 at 38.39.50. So I can't steal Rob's thunder, and I forgot to tweet out his very what do I call it? Mysterious. When macro comes this way, and I can make a guess what he's talking about, but Rob, I don't want to steal your show. It's pre-market prep with stock odds. It's not stock odds with pre-market prep. What do you got for me, Rob?
No, here. Okay, I just want to tell the audience what goes on behind the scenes, because you always want to know, like, okay, well, how do they make that reality show, or what do they do, right? Well, Joel comes to me and he goes, like, give me something to tweet out, right? So it just popped into my head, right? Something wicked comes this way. Remember that from the past? So some macro comes this way. So that's what he was supposed to tweet out to you guys. And now then he has the audacity to ask me what I'm talking about so that he can get it out in front of me and tell you the whole story before it even begins. That's how these guys, these moderators and everything work. They want to have all the juice ahead of time.
Are you referring to the Aerosmith song, Walk This Way?
Oh, okay. Yeah.
All right.
I can't remember, Ray Bradbury or whatever. I was something wicked.
Okay.
This way comes. So you can be going along fine. Let me share my screen, right?
Mm-hmm.
Because we can look at it then this way. So you're boogieing along here. We got Friday, and then
which?
Yeah. And everything was going fine here. Hold on a second.
Oh, Quadwitch is this week.
Quadwitch is Friday, this coming Friday. Yeah. Something stuck here. So anyway, we go along on open on Sunday here with the futures start trading at 3 p.m. 6 p.m. Eastern time. So we start trading and we move up, and the S&P 500 had a record close on Friday. So
yes,
we were building off of that. We were into new, uncharted territory again. And then, we stabilize and we're doing fine. And then all of a sudden we start to come in here before the open, right? So we were already down about, right here, right? We were right about there when we opened, and we've slid since. But obviously we're heading back. We got a lot of numbers. That's the difference between going up into new highs and coming down. We've got a lot of numbers to lean on. So, everything was fine. The market was kind of shrugging off the Omicron thing. And then all of a sudden we start giving that back pre-market, and, that's right across the board. Here's the Dow futures, S&P, NASDAQ 100, and the Russell. And the Russell actually had leadership last night percentage-wise. I think it was up about double. The diamonds, the spiders and the NASDAQ Qs, they were all up similarly. Well, the futures of them anyway. And the Russell, which IWM is the tracking stock, was up the most. And then everything went south. So now we're sitting at Russell's down 1%, NASDAQ 100 is down 0.57, S&P down 0.51, and diamonds down 0.74. So almost a mirror image of what was happening earlier. So why the change? What, why do we have things, dismissive of these catalysts, and then all of a sudden now there's new concern again? So like anything, the media would always want to put it onto one subject, but this week has a lot of news, a lot of considerations. Normally, it should be a week where things are moving along pretty good. The breadth of the market is good. Kind of continuing on with what we saw in the futures last night, right, Joel? Like that's more the temperature, the attitude for this week. Would you agree? So then what happened? What came into the equation, right? So then we had
you had the follow through. You had a strong close, right? So you expect some follow through off the close. Then you got a little top heavy, and you know what? I know what's going on in Great Britain and stuff, but it seems like they've always been lagging.
No, but here's the concern. This is why you do have to, no matter what you're doing, statistically trading or spread trading of any sort, what you're doing regarding just single stock trading. I mean, you have to keep your ear to the ground for the macro stuff. So why the news out of England is so important is because if you look at it in this context, we already know that the symptoms are less severe than even what Delta was. And that's in keeping with how things mutate in general. They do get weaker, but they may be more transmissible. So what's been learned so far? Greater transmissibility, but not so bad on the symptoms. But it's happening in what you would not really breakthrough of the same variant, but it is breakthrough in the sense of double vaccinated. So think of the concern for the healthcare system globally, when that's why the lockdowns were happening in the first place, was try to alleviate the pressure on the healthcare systems globally, right? Mm-hmm. So think about it in this context. If somebody now gets a little tickle in their throat, they right away want to run and they fear the worst, and they're going to get a test, or they're going to jam up, emergency rooms, blah, blah, blah. So the concern is how people respond and what pressure that puts on our medical system, and what pressure that puts on governments to maybe have to dial in again and be more restrictive. So this is that response, and you see it immediately in oil. Okay, so a macro concern affects certain groups or sectors or industries more significantly than others, right? So right away you saw a flight to quality, like even Coca-Cola trading up pre-market, some of the more defensive names, things like that. And you see oil trading down, and some of the discretionary and the tech names getting hit again. Other than the ones that we look to for protection and value, and that's Apple and Microsoft. And you can look at a map of the market, and you can see, how well they're holding up relative to other things. Adobe doing well, some of the drug makers doing well. Myrna's up again, pretty significantly, 5%. So again, you see some of the discretionary getting hit and all that. And so that was evident pre-market. So everything was fine. We were kind of accepting, this week's news already. We were shrugging off Omicron. We were, rallying into new highs for the S&P. and NASDAQ and Dow Jones were not at new highs. We were starting to bounce back already on the Russell, and then we start selling off. So part of it is also the leadership, in international markets, what's happening internationally, as well as what's happening in crypto land. So because crypto's trading 24 hours, this was weakening well ahead already. Bitcoin was already weakening ahead of the S&P 500. So you also have to watch Bitcoin for that sort of evaluation of risk on or risk off. We talked about this a bit on Saturday, and just sort of adding more to that is that this is, because it trades 24 hours, because that, new economy all centered around, blockchain, crypto, and of course, Bitcoin still being referred to as the father of it, kind of like Amazon is the father of, internet marketing and sales and stuff, and really proved the concept better than anybody, I think. But so Bitcoin is still that granddaddy. And you look at that and you say, okay, it had significant leadership. It was already selling off, well in advance of when the S&P started to roll. And then, we opened and we continued to go down. So you can have the best game plan, and something in the 24-hour period or something from another country or whatever can come in and interfere. So what do you do relative to basket trading? So last night, I curated longs and short ideas out of the screener for today. No preference to discretion, like on an industry or anything like that, just sort of diversified. Then I can come in the morning and I can always, if I have exposure to oil companies on the long side and something's changed, I can certainly just eliminate putting longs in for the oils if I want to. Okay. The second component is when you set that up, you might be thinking, okay, what is it going to look like the next day, since we're going to have this gap open to the upside is what it was looking at. Am I comfortable with these shorts making sure I get filled on them? And then what am I going to use as my hedge? If the market's a bit, top heavy, I'll probably use my hedge to be the diamonds. And because it was already lagging a little bit too. So, it has a little bit more cushion on a defensive side. If the market looks like it's aggressive, the Russell's still performing really well, the groups that are kind of the risk on groups are up, then I would, if I got filled on too many shorts, I would be long more the Qs or long more the SPY. So that was the rehearsal before today. Then you come in and you see something is changing. So when I looked at that and saw how much we had pulled back prior to the open, I just sent my lists in completely diversified. Okay. I didn't make any changes. Everything was fine. I didn't have exposure to anything that I was concerned about. They were well diversified, balanced, long and short lists. I put my envelopes at 1.5%, meaning it's not super aggressive. I didn't want to miss on some of the stocks that were down 1% that looked that they would continue to go from down 1% to maybe down 2 or 3, whatever. I didn't want to miss those, so I wanted to be aggressive enough to be willing to sell down a little bit, as well as capture some of the strength that was being evident pre-market. So that 1.5% envelope was appropriate for today. As it was, there was only 2 stocks on my list that I didn't get filled on. Hedged a little bit with the SPY, and that has been good. So performance on the basket is above my benchmark by about double. Okay. So it's the diversified approach is proving itself. It's very different to have a sustained gap up when you approach. You can allow yourself to pull a group or put on more shorts possibly than longs, having your hedge standing by. If we're opening down on a gap, it's possible to get more longs on than shorts, again having your hedge standing by. Having been up and then pulled back to opening flat or slightly below, you're going to take more of a diversified approach. Does that make sense, Joe?
Yeah, I mean, what I like about what you're saying is, I think it was one day last week when we had the big up open, and you were willing to be more aggressive on the long side with your envelope, and then today, you were prepared to be a little bit more aggressive on the downside. So it's just keeping an even balance in the
Yeah,
market.
well, it was the same aggression on the long side. So the 1.5 means that I'm willing to pay 1.5% up on the longs over their closing price or over fair value, depending on which way you want to look at it. The same thing on the sell side is aggressive to be able to sell down to minus 1.5%. So that level of, aggression is or not, or being passive, is quite discretionary, I think, because you do have to consider kind of all of the things that are going on, this macro and where the market is. And I just think, as you've studied for many years, where the market trades overnight and its reference points in terms of highs and lows, pre-market, tying that all together gives you that indication of what the temperature of the market is. Is it like the other day when we talked about the animal spirits? Is it that, or is it more defensive? And today was pretty clear that we had switched from being willing to embrace a bit more risk but still having that value kind of, we got to be picky and choosy, right? So switching from that to more of a defensive posture, that was pretty evident. We brought up the Omicron only because of that concern about, oh no, here we go again. We know that it's going to be endemic and there's going to be many variants, and ultimately these things will be like what happened with the Spanish flu. And you've got lots of different variants of colds and flus and things, and you guys have all lived with them your whole life. And people came into the office, one guy had the flu, one guy said, oh, I got a cold. You never did anything about it, and that's the way the world was. And now, the problem is that as soon as somebody has any type of issue, the concern is that they've got COVID and they're going to die. So they do put stress on the medical system.
Yep. Eric,
right? It's just the way the world is now. It's quite different, and quite the fear that's abundant is, of course, being driven by the media constantly, but it's just really concerning how afraid people are.
Yeah, and just a quick note from Eric here. He said that the travel and leisure stocks from his shorts list were trading around 2%. And his envelope, he didn't get filled on the shorts. He was only going with 1.5%. So yeah, I mean, that's where, StockOdds, where, discretion. I mean, StockOdds has a probability based, on the historical price movement, but it doesn't know what the news or
for the most part, it's fine. I just curated S&P 500 names for today, a balance of long and shorts based only on StockOdds information. And I have the opportunity to do discretion in terms of the group exposure. I chose to stay balanced. I have the ability to be aggressive or not. So that a little bit more experience goes into that, I think, for people. But at the same time, you can add macro, you can add technicals, you can add fundamentals, you can add sentiment, all these other things. But if you don't have some clear signals, then just stay really balanced and don't create that exposure. Does that make sense?
Especially when you're getting started. All right, we're gonna
especially when you're getting started. And if you're getting started, really good to stay within the same group and kind of become that surrogate specialist of that group. A lot of guys have trained themselves to trade just by trading the oil stocks and only trading it and just getting really good at trading those oil stocks, both the long and short and hedging and all that kind of stuff. So don't be afraid to train yourself by sticking with something you can become an expert in. Okay.
All right, we're gonna wrap things up for this this Monday. We're about 9 points off the low. We started to move towards Friday. Friday's inner-day low, and Globex lower, a little bit different, but we'll go with our 46.57. That was your Friday's low based on the March contract. Rob, great information as always. With any questions, you can email Rob. Rob at what's the email you want people to email?
MyStockOdds.com.
MyStockOdds.com.
So again, this week we've got the
Fed meeting,
Fed conversations, and what's going on. A little bit more color on that. We've got the some lifestyle rebalancing, but we've got the NASDAQ 100 rebalance. Those stocks being added and subtracted. We talked about that on a podcast last night. I mentioned all the names. We have expiration on Friday, so you can look at your seasonality calendar for Friday and see what stocks are favored. You're also right now in mid-month seasonality, so you can look at what stocks are favored there. Notice some of the solar stocks were in play for this week and stuff. So if you like that group and Enphase and things like that, there might be something for you to nibble on. So, all right, we'll let you go.
Yep, we'll follow it around for the remainder of the week. Thanks, everybody. Have a great rest of your day. Back with you tomorrow, same time, same place.